between Iran and Israel right now. US, for the moment, has opted to stay out of this war. But what are you making of the development between Iran and Israel? How bad could it get for global markets also in terms of crude?
Well, first of all, the Israeli thing. The Israelis have been spoiling for this for quite a long time. It's well known that Trump has tried to persuade them not to. They've clearly gone against his advice, and the Americans now are obviously tooling up to prevent any attacks against US areas, but they've made it quite clear that they haven't really been involved. So Iran, then, if they're looking at retaliation, I think they're really looking at Israel. Now, this may come explicitly in terms of the kind of drone strikes that they tried to do earlier, but Israel's defenses are quite strong there, or implicitly, in terms of maybe terrorist attacks in other places. But it clearly doesn't help the situation. It adds to global uncertainty. It adds to the uncertainty in the market. And actually, I think Trump is probably feeling a little bit miffed that perhaps the Israelis haven't quite followed his advice.
Richard, what do you think could be the impact on markets other than crude? Because what you're seeing today, of course, is a knee-jerk reaction. Most global markets were already scaling at an all-time peak, perhaps looking for a reason to profit take. But do you sense that we could spiral down further?
Yes. We've seen a very good recovery in markets generally. Europe because it's a diversifier to the US because actually, we have had the Trump taco trade, which is where there have been small pieces of good news that have really seen a recovery that has led a recovery in US share prices. We're now at a stage where markets pretty well are back to where Trump started. That's actually, I think, an important sign. But I think we're also much more fragile. Unemployment is looking less good than it was. Growth is looking less good than it was. We've got the closing deadline of July the 9th for the tariffs to come back in line. So we've got a lot of things coming up here. And I think we are in danger of maybe some event. Maybe it's this Israeli event. I don't think so. But maybe it's this event where the markets really say, OK, that's enough. We've had enough. Markets are very fragile. And I think they're just waiting for that unknown event in order to unwind.
All right, we're moving on. We also have Peter McGuire, who's the CEO of AustraliaTrading.com. Welcome, Peter, on the show. But firstly, help us with your take on crude oil, because with the tensions rising between Iran and Israel, we're already seeing a 10% jump. But Peter, this particular attack actually impacts the supply chain as it impacts one of the key routes for the supply of the oil. Give us your sense. How do you see the situation escalating and its impact on the oil prices?
Well, good morning, Srishri. I think a couple of things. As you mentioned, the Strait of Hormuz is, such a integral part as far as it's a true choke point when it comes to energy transportation and the impact that can have across the whole Persian Gulf. So the market's up now, as you said, 9.5%. We've just got to see how this moves forward over the next couple of days and whether there was to be any form of interaction from the US, because they've got many carriers around that sort of area, and whether they were to be involved, or if there's any chance as far as production not being able to be shipped through there and that choke point remains shut, then that's going to actually force prices much higher. So that's the issue that we face at the moment, the degree of uncertainty.
Hi, morning. This is Snehi also joining in. Give us a sense of these elevated crude prices that we're seeing right now, the sharp uptick. Do you believe OPEC would step in sooner or later in terms of some price correction now? Because we've had the OPEC secretary say a few days ago that he's not seeing a peak. Do you think perhaps the oil market could peak given the sharp uptick that we've seen this morning?
I'm not sure how much further it can go. It depends on the escalation in the sense of Israel versus Iran. OPEC have got their own mind. They wouldn't have been aware of this to play out in the magnitude that it has and the impact that it has. So every hour that rolls forward is another new lens that you've got to look at the markets with. And from where it's sitting at the moment, you're at 74 plus for WTI and 75 and a quarter or 75 and a third for Brent. You could be, at that by Monday morning or this time tomorrow, I should say, when the market's shut in New York, you could be added, a few dollars on from where we are at the moment.
Richard, what happens to money flow in a case like this? I mean, this is not the first time that we've had two countries battle it out. We've seen that since Russia, Ukraine, then it was Israel and Gaza, and now, Iran again. We've seen that here in India as well with our own neighbor. But does it really impact money flows at all, or do you think that's clearly restricted to tariffs and what comes of it?
I wouldn't be surprised.
Richard?
Sorry, that was for me.
Yes.
What we've seen a lot of these issues over the last few years, and markets react. It takes a day or so to react, and then they come back. At the moment, we don't really know what's happening, but I think the markets are quite immune, if you like, to a number of these factors. They've survived two major wars. They've survived all sorts of issues with Trump and tariffs, and still they're trading at a reasonably high level. Bull markets die hard. I would expect that this will end up being another skirmish that will disappear over the next 2 to 3 weeks. Maybe wrong, but I think the probabilities are like that. I think one escalation could be if the Iranians do decide to see if they can choke off oil deliveries out to the Arabian Gulf, then I think the Americans will step in because it's important for the world. And I think the Americans do see it as part of their holy mission to keep that Gulf open. So I think that if you're looking at oil prices, they're likely to be quite volatile because you've got these different factors involved. But I think at the end of the day, the US will look to keep it open. Whether that will then cause a secondary dispute between the US and Iran, well, that's probably going to happen anyway. But I think that'll burn at a lower level.
Is the most obvious trade right now is maybe go ahead and buy gold, because at the morning today, gold is already at near to its all-time high, holding on to the gains of over 1.5%.
Well, gold's flavor of the month, isn't it? And the dollar, it normally takes that view, but because we've had the whole issue with Trump and weakness in the dollar, I think it's being less successful. Of course, the other thing for those who actually believe it is Bitcoin, which I think the cryptos will probably do quite well in this environment. I think crypto is actually quite focused on the equity markets, so they will come off. But in the very short term, they may be seen as a gold substitute. But gold, to my mind, seems to be the key factor there that people will be looking at.
And Peter, would thank you for taking the time out and speaking with us this morning. But yes, that's the big news that we have been tracking. This almost a 10% surge in crude oil prices, 1.5% gain in gold, as well as a big fall in US futures, and even GIFT Nifty is indicating a gap down start for ourselves. But amidst this, let's go across to Shesha, who is joining us with the global comments.